Welcome back, everyone, to Market Matters Media, where we delve into the heart of the most critical issues affecting our lives. Today, we are diving deep into the tumultuous waters of the housing market in 2024. So grab a seat, hit that like button, and let's unravel the layers of this unprecedented housing crisis. The year 2023 has brought with it a grim reality for the housing market, signaling the onset of a severe recession. Realtors, home builders, and experts alike unanimously agree that the housing market is on the brink of disaster. In even the most sought-after markets, the supply of available homes has dwindled to a mere 1 or 2 month inventory. To make matters worse, some renters who can afford it are taking advantage of the turmoil. As the dust settles, it becomes increasingly clear that the situation may be even direr than initially perceived, with the potential to reshape the future of real estate. In this video, we delve into the multifaceted aspects of the impending housing market crisis, exploring the factors at play and their potential consequences. The past 2 years have witnessed an unprecedented series of events, starting with the government's massive money printing initiatives, followed by an equally unprecedented withdrawal of funds. Simultaneously, interest rates have surged at an unprecedented pace, surpassing any historical precedent. This volatile cocktail of economic events has culminated in a crisis that the housing market may struggle to weather. It is increasingly likely that 2023 will be recorded as one of the most significant housing crises in history. It's understandable that many find it challenging to accept the notion of a housing market crash, given its historical resilience. Over the past decade, home prices have consistently risen, seemingly impervious to predictions of a downturn. This scenario eerily mirrors the sentiment leading up to 2007 housing crash, which was marked by a similar sense of invulnerability. Figures such as Michael Burry and Steve Eisman immortalized The Big Short, saw through the facade, recognizing early on that housing prices were bound to plummet. They profited immensely from this insight, while the broader market remained oblivious until it was too late. Recent reports indicate a disconcerting 27% drop in the number of homes sold compared to the previous month, painting a bleak picture for the market. Homeowners are understandably hesitant to part with their properties in these uncertain times, resulting in a palpable sense of dread in real estate circles. The scenes of protest and apprehension witnessed in cities like Los Angeles and Miami are reminiscent of the gloomy days of the 2008 recession. However, the situation today might be even more precarious, as data points to the housing market's alarming vulnerability. The National Association of Home Builders Housing Market Index, or NAHB Index, which gauges home builder confidence in the United States, has seen a consecutive 12-month decline, plummeting to a mere 31 out of 100. The primary reason for this dismal outlook lies in the difficulty prospective homebuyers face in securing affordable mortgages, owing to the relentless rise in interest rates. Banks are growing increasingly cautious about approving loans, cognizant of the impending market downturn, which has led to a significant drop in demand for homes. The consequences are especially harsh for home builders who aggressively invested during the housing boom, now grappling with financial hardships. A troubling consequence of this crisis is the reduced emphasis on quality control in newly constructed homes. Home builders, often constrained by financial limitations, are compromising on construction quality, leading to issues like uneven floors and defective bathtubs. Reports of subpar construction quality are no longer rare, and incidents of buyers discovering poorly constructed properties upon moving in have become disconcertingly common. Banks, once stalwarts of the mortgage industry, are making a hasty exit, reminiscent of their actions during the 2008 recession. Wells Fargo, a behemoth in the mortgage sector, has announced the downsizing of its entire $1 trillion mortgage division. This move has sent shockwaves through the industry, harkening back to the days when Bank of America and JP Morgan Chase slimmed down their mortgage operations during the 2008 crisis. The fact that such an exodus is happening again raises serious concerns about the state of the housing market. Fannie Mae, a major player in the mortgage industry, has raised red flags about the housing market's vulnerability to rising mortgage rates. Their National Housing Market Survey reflects a grim outlook, with a staggering 76% of citizens believing it is a bad time to buy a home. Such a consensus among the public can only foreshadow a further decline in housing prices. In line with these concerns, mortgage applications have plummeted to a 22-year low, underscoring the market's distress. Before we continue our exploration, don't forget to subscribe to Market Matters Media. By doing so, you ensure that you stay informed about the latest developments in the housing market and its broader economic impact. A leaked clip from the Federal Deposit Insurance Corporation, or FDIC, has shed light on the government's reluctance to divulge vital information about the financial crisis. The FDIC's internal discussions reveal doubts about the stability of the banking system and a desire to keep this information from the public. While there may be valid concerns about causing panic, withholding essential information about the fragility of the banking system from the public raises ethical questions. It emphasizes the importance of maintaining public confidence, even as banks incur significant losses in the housing market. The crisis isn't confined to the buying and selling of homes. The rental market is also experiencing significant turmoil. A lack of confidence in the rental market has paralyzed many renters, leaving them unsure about their next move. For the first time since 2009, U.S. apartment demand has taken a negative turn, defying the typical surge seen after college graduates enter the workforce. The pandemic may have played a role in this phenomenon, but employment data shows that most college graduates have found jobs. Instead, the uncertainty surrounding the housing market has prompted graduates to stay with their families, further exacerbating the demand issue in the rental market. Government policies during the pandemic, such as the COVID-19 Tenant Relief Act, hindered landlords' ability to evict non-paying tenants, contributing to the current rental market turmoil. As government support for renters wanes, landlords are increasingly resorting to eviction filings. In some cases, tenants who can afford rent are exploiting laws that allow them not to pay, which has triggered protests and debates among landlords. These policies, while intended to protect vulnerable renters, may not be sustainable in the long run. Procrastinating on addressing the inevitable consequences could lead to a worsened outcome for all parties involved. The housing market is teetering on the edge of a precipice, and the future appears uncertain. Banks are fleeing the mortgage industry, government secrecy surrounds the financial crisis, and the rental market is in disarray. While the situation may appear bleak, it is essential to remember that crises often serve as catalysts for change and innovation. The coming months will likely shape the future of the housing market, and stakeholders must adapt to the evolving landscape. As we navigate these turbulent times, the only certainty is that the housing market of tomorrow will bear little resemblance to the one we have known in the past. Thank you for joining Market Matters Media on this in-depth journey into the heart of the housing crisis. If you found this exploration valuable, don't forget to hit the like button and subscribe. Stay tuned for more insightful analysis and updates. Together, let's make Market Matters matter. Until next time, stay informed, stay engaged, and take action for a brighter housing future.